Hey everyone, I'm Annie Dickerson here with Quentin and Dee from the Real Estate Accelerator team. Hey guys, happy
Hey,
Wednesday.
everyone. Happy Wednesday, hump day.
Hello.
Yeah,
Yeah.
that's right. I haven't heard that term in a while. Oh
I
man,
know.
hump day. Yes. I used to think it meant something else. And then somebody was like, no, it's like the middle of the week. And I'm like, oh, okay.
Yeah,
My mind was in a different place.
yeah.
Yep.
Well, I'm
Well,
super
anyway,
excited
yeah, what are
for,
we talking about today?
yeah, so I'm super excited about today's topic. This is a big one that comes up within our RIA group around creating partnerships within the multifamily space, capital raising space. So I know a lot of people early out are always like, oh my God, I need to get a deal. I need someone to partner with. Who can I bring into my business? So I know Annie, Julie, and our team has had a lot of experience coaching and experiencing how to create those really good partnerships to really accelerate your growth in the business. So with that, let's dive into today's topic on how to vet potential partners. So just a quick background on the Real Estate Accelerator here. So obviously we are here to help you scale, raise more capital, and do bigger deals. So some fun things that we've got going on in the Real Estate Accelerator. Our group has raised over $100 million in capital for their own deals. Within our group, we've had over 25 partnerships formed within that group, which dovetails nicely into today's topic. And we've also helped create and launch 35 new syndication brands to help other people go out and tap their networks and spread that impact over to all of their investors.
Woo, woo.
So yes, a little bit of fun stuff with the Real Estate Accelerator. Some quotes from some of the recent launches. We've helped people raise successfully $2 million on their first syndication deal. We've helped people double their raise capacity after going through our course. And we've had another group that we've helped raise over $3 million on their first syndication deal right there. So just a little bit of inspiration out there for some of you guys that maybe are just starting to get started in capital raising. Maybe you've raised a couple $100,000, but kind of the systems and format that we have in the Real Estate Accelerator works. And we're super excited to see other people taking our framework and leveraging it in their own businesses there.
This is so amazing. I wish that Julie and I could have raised 2 or 3 million on our first syndication. We didn't even have that. And so the fact that our Real Estate Accelerator members are seeing such huge success is phenomenal.
Yeah, super exciting stuff there. So coming back to these 25 partnerships that are formed within the group, not only have we helped people partner within the group, but also outside of the group. So we wanted to start off with some common questions to start off with when you're vetting potential partners. So number one here, which I would say is probably one of the most important things you want to hammer down first, is knowing what are your own strengths and weaknesses. And by doing this, you're able to identify what are the gaps that you have in your skills, in your experience, and how can you kind of start identifying other partners that are able to fill those. So obviously the real estate space, you've got asset managers, you have marketers, underwriters, CEOs, everybody wears a ton of different hats in the real estate space. So knowing where your strengths, where your experiences really stand strong will help figure out who is really a good fit for you.
And a partner is a big deal, right? You can hire employees, but having a partner, that means you're sharing the business together with them. And whether that's in a co-GP capacity or whether that's a business partner relationship, it's not a, 1 month and then you split up sort of a thing. This is a long-term partnership. For a syndication, it's going to be 5 years. For a business partner, it could be even longer than that. And so you really want to take your time finding the right person. And when Julie and I got together, this was exactly why we got together, was because her strengths offset my weaknesses and vice versa. We sat across the table from each other. And I still remember she asked me what I loved about this business. And I said, oh my gosh, I love the content creation. I could create blog posts and videos and courses all day long. I would be in heaven the one thing, if I could take the one thing off my calendar, it would be the investor calls. I'm like, I love talking to investors, but it breaks up my day. I can't get into my creative flow. And she's like looking at me wide-eyed and she's like, oh my gosh, I love that. I love the investor calls. I live for those questions. I love talking to investors. I hate writing blog posts. And so right there, we could see each other's strengths and weaknesses. And through that, we were able to see how we sort of fit together and what that business relationship could be.
Yeah, it's so awesome seeing how you guys complement each other, even just working in the day-to-day with you guys. And then another thing that I know Julie talks about all the time, especially related to strengths and weaknesses, is that in your guys' instance, if Julie is able to focus on her core strengths, she's able to 10x that side of the business, while you're able to focus on where your strengths are and able to 10x the business on that side. So again,
Yep.
I feel like that's a common thing that kind of that isn't as obvious when you're first looking at partnerships, but when you're really able to focus on your core strengths and experiences, are you able to just really hockey stick and drive a lot of growth from that?
Yes. Can you imagine if early on Julie was writing all the blog posts and I was taking all the investor calls? Oh my gosh, we would have like no content and almost no leads. And the leads that would come in, I wouldn't be able to close them.
Yeah.
So what a disaster, right? And so I know out in the world they say, work on improving your weaknesses, and we're all a work in progress.
Yeah.
And if you can really double down on your strengths, it can take you so much farther faster and 10x, just as you were talking about.
Yeah. And then a follow-up question to stack on top of strengths and weaknesses with yourself and your potential partner is, what are their goals, missions, and values? Again, this is another big piece because, again, like Annie was saying, you're entering into a long partnership and relationship with this person, and having that base foundation of goals, mission, and values is crucial in being able to sustain a business over the long term. And
So
I
I know
don't
that
know.
it's kind of awkward to sit across from somebody and be like, so what are your goals and mission and values? And they're going to be like, yeah, I don't want to partner with you. Uh, Instead, here's a great exercise. This is what Julie and I did early on, and how we realized that we were such a great match, not only on the strengths and weaknesses, but also on our vision. Was we got together, and you don't have to do this in person if you're remote. You can do this something similar online. But what we did was we got together, we got a bunch of sticky notes, and we said, okay, let's just put up on the wall all the ideas for this business that we want to build. Any ideas that we have, let's just get it out there, and then we can see what type of business we might want to build together. And then what we did was we put all the sticky notes up, and then afterwards we started to say, oh, look, your idea around building an investor course, hey, I've got that idea too. Let's put those together. Or your idea around doing X number of deals or doing deals in this market. Okay, let's put those together. And we started to see, so here's the two things. We started to see how things aligned and also areas where we diverged. But more importantly, we were able to see each other's working styles and what do they call it? Compromise. And so when we saw things that didn't quite match, it was really interesting to get to see, okay, how does the other person respond when I have an idea that maybe they didn't have? Do they respect that, or do they say, oh, no, I don't want to do that. That's not something I'm interested in, right? And so through that, it's not a direct asking of goals, mission, and values, but you get to see all of that and you get to see how you would work together.
Yeah, I want to make an important distinction. Were you guys collaborating on this when you were doing it, or was this two separate post-it note sessions where you guys were just focused on your own responses and then you came back together to see the
Oh,
similarities?
good question. So we actually did this together in real time. So we were just, we set a timer and we started putting as many ideas as we could. Then we put them all up on the wall.
Awesome. No, I love it. I know we do similar things at our team retreats. We did that last year. And again, even just with the team itself, like you really get to understand those working styles by going through exercises like that.
Mm-hmm.
And then question number 4. So this kind of ties into the strengths and weaknesses. What are the roles and responsibilities of each other? How are you guys going to be separating? What are the roles in the business with Annie and her marketing genius and Julie and her ability to talk with investors? Like, how are those roles going to be divvied up? What are the expectations there? And being super clear on how any sort of adjustments or changes within those roles are going to be made.
I highly recommend, even if you're not applying for a job per se, I still highly recommend that you write out a job description for yourself, and you have your potential partner write out a job description for them. That way you can look at on paper, okay, what are you going to be doing? What are they going to be doing? Does it match up? And I would recommend this, whether it's a business partner or a co-GP sort of relationship, so that you can have on paper exactly what's expected of you and exactly what's expected of them. So there's no there are no assumptions, there's no guesswork, and more importantly, there's no resentment down the road.
Yeah. Awesome. And then final piece, what is their track record? So this can be an experience in real estate. I'm sure you and Julie hammered this out on your guys' backgrounds in real estate, but touching on the co-GP part, especially when partnering with another group, what is their track record? How are their properties performing? How have they handled issues with any properties that have come up with any surprises, as most deals do in the real estate space? And having a really good understanding of just what their experience has been leading up to where you guys are at today.
Yeah, exactly. And if you and your potential partner are just starting out, maybe it's not necessarily, how many deals, how many commercial deals or syndications have they done per se, or how much capital have they raised, but maybe there's other ways to vet their track record. Maybe they've done rental property deals, smaller rentals or smaller multifamily, and maybe you can ask them to tell you about that. Or maybe they've invested in other syndications as a passive investor, and maybe they can tell you about how they went about doing their due diligence before investing. And so there's lots of ways that you can really get at the track record. Basically, you're trying to understand, does this person do what they say they're going to do, and do they do it successfully? And so whatever way that you can go about that, Julie and I, early on, we hadn't really, she had done a couple of raises. I think I was just starting out. Maybe I had raised like 200,000 on my own. But she had been doing it for 6 or 7 months when we partnered together. And funny, I didn't even really ask her about that. I was more interested in, her character and the type of how she was showing up. And that's a big part of it too. But even for her to vet me, I hadn't raised a lot of capital before. I hadn't been in this business very long. But when I told her, I love creating content, I love creating blog posts and videos and things like that, she could go to the website that I had created. This was in the super early stages of goodegginvestments.com. And she could see, in the 2 months that I had been in it, all the blog posts I had put out. So even that is a track record of sorts. So just making sure that the person you're trying to partner with actually follows through and sees success on what they say that they have done and are going to do.
No, I love that. Definitely a lot of ways to kind of vet people and their experience. And you can definitely get creative there as how you can approach that.
I will tell you, I'll add one thing, is that when we have turned down potential partners, and there have been many, there's like a graveyard bucket of partners that we've thought about, and we've realized like maybe it's not the best fit. No fault of theirs or ours, just, not a great fit. And, sometimes it comes down to even like reading between the lines of the responses they're providing, the emails that are going back and forth, the cadence of the emails. Are they communicating? It all all of these things are little, little tiny signs of how they'll be in a partnership. It's like dating, right? When you're
Yeah.
dating, you look at every little sign. You're like, okay, is he opening the door for me? Is he calling me? Is he picking me up at the time he said? All those things, right? They all factor in to the overall impression that you have, and the signs that this person will be a good partner down the road. And it's the same with business partners.
Yeah, no, that's a perfect segue into our next slide where we talk about some other tips and tricks on how you can do kind of your own due diligence with any potential partner that you're looking to potentially work with. So to Annie's point, follow their newsletter. Do they have podcast interviews? What's their social media presence like? Are they on any webinars? What are all these different little touch points that you can start to get an idea of how this person communicates, what their perspective is on things, and kind of just learn more about their story. I know Julie tells us all the time when she was still working full time that she would listen to operators in their podcasts as a part of their due diligence so that she could understand their perspective on how they're looking at deals, what markets they're looking at, is another touch point with them.
Yeah, the more that you can get to know someone from all different angles, you can create this 360 view of them. And definitely podcasts are great because you get to hear them talk and you hear the words that they use and how they describe any past successes or maybe not so successes that they've had before.
Yeah. Another common thing, again, building that relationship over time, not just hopping into a partnership right away. Invest passively with them. If all signs are looking good and you like how they're communicating with you, what their deals look like, try investing with them. See how it goes. You'll get kind of a look behind the scenes of how they communicate about their deals, what their investor experience is like, and if that kind of aligns with how you envision creating that same experience for your own investors. So I know you and Julie both do that a lot as well with potential partners and when we're looking at other types of assets too.
Yeah, you hit the nail on the head. I think that most people, when they try to get into a partnership, it's usually because there's some pain point that they're trying to solve for, right? I'm not good at marketing, or I can't raise capital, or I need somebody to do the asset management, and they're looking for a partner to help take that on. And it can be really painful if you have to shoulder that while you're looking for a partner. And so the thing that you said was a lot of people rush into it. And that is probably the biggest mistake that we see with partnerships is people, they're like, oh, yep, you're good. I like you. Yep, I think we're kind of compatible. Okay, let's just do it. Let's just figure this out along the way, right? And then as they go, the months go, and then they look at potential deals together, or maybe they're co-GPing and they do a deal together, and then something goes awry, and they realize something, on the last slide, like their strengths or weaknesses don't align, or their mission, vision, and values don't align. And so it's super important. You've come all this way. Be patient just a little bit longer and make sure you do your due diligence, because trust me, it's going to be a lot more painful down the road if it doesn't work out and you have to figure out how to separate from that partnership, or if you get your investors into a deal with a co-GP partner and that partner is not performing, that's going to damage your reputation. And so think about all the potential second order consequences of you rushing into it. So for all those reasons, definitely take your time and do your due diligence.
Yeah. Yeah, and another way that we've seen people kind of do another layer of due diligence is through talking with other people that have partnered with them before, or maybe people that have worked with them for. This could be CPAs, financial advisors, accountants, like anyone that has kind of either worked with them or rubbed elbows with them. It's always good to see kind of what type of experience that they're having with other people, again, to get that proof of that solid relationship, what Annie touched on earlier around just making sure that they do what they do and they do it well. And this is definitely a good way to kind of tap your existing networks and other people in the space to get a better idea there.
Yes. And I know these days it's not always possible, but when possible, try to meet the potential partner or group in person. And so there's only so much you can learn about somebody through a phone call or through Zoom. There's a lot. You can certainly ask a lot of questions and get a lot of answers, but there's something different when you meet somebody in person. And so, to the extent that it's possible, make that investment, especially if you're serious about a potential partner, co GP partnership. Take the time to try to meet with them in person. I think it's going to tell you a lot. So, that in addition to talking to partners and other groups, again, trying to form that 360 view of who this person or this group is.
Yeah. And then one final tip is just perform a background check. It's super easy. You can look it up online. Again, this isn't that we're trying to poke holes in someone, but it's more just like a checkbox that everything behind the scenes is going okay, and their past deals, legal issues, and things like that. So these are super easy to order. Again, just a good checkbox to have in your back pocket if you guys are kind of moving towards solidifying that partnership.
And any partner who's serious should be open to you performing a background check on them, and they should want to perform a background check on you. And the last thing that you want is some surprise down the road. Let's say an investor, and investors do sometimes do their own background checks. Let's say an investor did a background check or did their own research on your partner. Maybe they discover something that you didn't even know, and that could come back to haunt you and hurt the relationship. So, like Quentin said, another great checkpoint before entering into the partnership.
Awesome. Well, cool. So that is kind of our high level tips as far as how to vet potential partners. So kind of to put a bow on everything, we obviously have a couple questions that are super important for you to always ask these partners. So what are your strengths and weaknesses? What are their strengths and weaknesses? What are the roles and responsibilities? What are their mission, their goals, their values? And how does all of that fit together in the little puzzle piece of this potential partnership?
Indeed. And so, for anybody out there who's looking for support, if you are if you are in the process of vetting a potential partnership, or you're raising capital, syndicating your own deals, and you need support or a second opinion, we're always happy to jump in and help.
So
Yeah, we have a question in the chat if you guys would like to answer it.
absolutely.
Let's do it.
Yeah, so Kim Nguyen says, let's say we started a conversation to partner with someone more experienced. How do we invite them to partner with us without sounding like we are trying to take a piece of the pie?
Good question.
Yeah.
Quentin, you have any initial thoughts?
Yeah, I know one thing that I know that we've coached a lot around is for a lot of new investors, finding someone that is maybe a little bit of a step in front of you is always a great way to start building up that track record and get into some deals that you might not be able to do alone. So I think you're starting off in a good point from there. Another thing on top of that, especially not necessarily taking a chunk of the pie, but how you can establish some sort of certainty or credibility with what you would be able to do. And you can do that by polling your investors or your investor base with some sample deals of what that partner might be offering for you guys to co-raise alongside them. So by being able to tap your existing investor base, and let's say you send out a poll with this deal and you're like, hey, all of my investors are super interested. I think I have 500K, $1 million on the sidelines that we might be able to commit to this. That will help show that you have some level of certainty that if this more experienced co-GP is able to bring a similar deal to that, that you have a good idea of what your investor base has available and would be interested in.
That's such good advice. And, you know, it goes back to the value that you can bring to a potential partnership. And the more that you can show that clearly, then your experience and your background matter less than the value that you can bring to the table. And so to Quentin's point, if you can show that, you know, like we were talking about at the very beginning, we've had RIA members who right out the gate, their very first raise, they were able to raise 2 million or 3 million or more. And so just because you may not have done a syndication deal, or maybe you haven't done as many as this partner that you're thinking of partnering with, if you can show that you can bring value to the table, either in the form of capital through your investor base or other skill sets that you can bring to the table. And again, that comes back to writing that job description so you can show them what you can offer, then that helps to bridge that gap.
Yeah. And I know
Thanks
there's
for your
a couple,
question, Kim.
yeah. And then I know a couple other things that we've also done, like some people that have like accounting background or asset management background, those can all be levers of your strengths or experiences that you could also bring to the table. So
Mhm.
obviously this is going to be on a deal by deal or partnership by partnership basis, but thinking about other ways that you can contribute to a deal that might be outside of capital, of bringing in capital, or other ways that you can continue to add value and bring value to the deals.
All right. All
You have
right. Any other, I
questions?
think, do we have any other questions, Dee?
Nope, that was it.
Okay, not at this time. All right. Well, Quentin, take us home.
Yeah, so for all of you guys out there, if you're interested in learning more or have any questions about the topic that we covered today, go to therealestateaccelerator.com. We have a whole bunch of information about the programs that we offer as well. We'll also drop in the chat. We have a 5-day capital raising crash course. If you want to get a little flavor of what we touch on in the Real Estate Accelerator, definitely sign up for that. Submit your responses to ria@goodegginvestments.com. And we'll love to kind of hold your hand and see where you're at in your journey and how we can best support you with next steps there.
Yes, we want your success story to be the next one that we share. So we're excited to get to know all of you. Thank you so much for joining us. And I think we'll be off next week because we'll be at our team on site, but
Yeah.
we'll be back in 2 weeks. See you all then.
Bye, everyone.